Hello, everyone. Welcome, CAPIS clients and friends, to another edition of our monthly research call here at CAPIS. I'm Ed O'Dowd, and I'm good to see you here today. We do these calls every month to give our clients kind of access to independent analysts, different research ideas, and helping them make their investment decisions. Last month, we had Markets Policy Partners kind of taking a look at the big picture, kind of a macro look, looking at the election, looking at kind of Fed decision possibly coming up. This month, we have Geoff Garbacz of Quantitative Partners. He's a friend of the firm, and he's presented before with us. And his firm, and he's going to get into kind of the way he looks at the market. His firm looks at the market, kind of quantitative factors and any other factors they do. They look at to kind of give them their outlook. So we're very happy to have Geoff today. Geoff, welcome.
Yeah, thanks. One other thing too. I'm the guy who writes the morning note for you guys.
That's absolutely true. I'm sorry, I forgot that. Yeah, he writes our morning notes. So those of you that are looking at the morning note every day, Geoff contributes by writing that for us. So it's fantastic.
So when we get done, if anyone has any questions about the morning note as well, I'm more than happy to answer that as well too. So feel free to ask about that also.
Awesome. So, all right, Geoff, well, with that, why don't we get started, and you can kind of give an overview on what you guys do and how you're looking at things. Markets have been, on everyone's mind, turbulence. So we have an upcoming election, certainly Fed decision coming up for September. So there's a lot going on. So I'm curious to see kind of how you're looking at things right now.
Yeah, so let's start with just a basic overview of where the markets are right now and where they've been. And then what we're going to delve into are really kind of three things. We're going to look at the impact of short interest on the market and the impact of options. And then the third area is kind of what we call our seasonality, coupled with what we call bias and triggers. So this is going to be a good overview, and it'll be very helpful to kind of understand where markets are right now and what's gone on with the market. So let's start with just a simple chart of the S&P 500, and let's go back a year ago now. So a year ago in August, we were having some weakness like we've had now, and then we kind of rallied into September, and then we had some more weakness all the way down into ultimately the October low. And this first leg down, we have a formula we like to use, which is called an ABC formation. A wave down, B wave up, C wave down. And then ideally, after you get the C wave, you would go back to where you started the correction from, and you break out and you go to a higher high. That didn't happen last year. So we evolved into we went down the C, we had a D wave up, an E wave down, and then the F wave. We finally got back above that August level in December. And then from December onward, we had a fantastic rally that went all the way into April of this year. And then when we got to April, we had a pullback. Again, we had an A wave down, B wave up. And we started a C wave, but we never really got it because we never went below the A wave. And then we rallied back up to a new high. And then the last 3 months into July have been great. What's really interesting about this kind of May through into July period is we had no volatility, no days up more than 1% or down more than 1%. It was just nice, easy move to the upside. And then middle of July, we hit some weakness. We had, again, an A wave down, a B wave up, a C wave down. And this big down, these down 4 days, this coincided with, this was the day of the Fed announcement. Thursday, the day after, Thursday, Friday, Monday. And then we hit the low a week ago, Monday. And what's amazing is we've been up 6 of the last 7 days, and today we're up again. So this might be day 7 of being up. So it's really interesting how this has occurred. And so this is the S&P, which a lot of people use to track the market. But the other thing that's really interesting is this is small cap. This is the Russell 2000, and it's a completely different looking chart. It basically had gone sideways all year, no return, and then all of a sudden, boom, when the S&P started correcting, the Russell actually really took off and went to the upside. But then again, when we came out the backside of it after the Fed, it has corrected as well, and it hasn't done nearly as well. So we almost kind of have two, and then I'm going to throw another one in here, the Qs, and we'll also look at tech in a second to see how that does. Here is the Qs, correction in April, like we talked about, and again we've had the same thing. It has come up not quite as strong as the S&P, but it's pretty close to doing that. And if we look at XLK, which is an ETF that tracks technology has come back a bit too, but not nearly as strong as what the S&P has done in this time period. And what's so interesting about right now is I'm going to go to pull up another chart. One thing that we do is we do some unique work on short interest. So here's the history. Short interest is basically reported every 2 weeks. It used to be reported once a month. And this is the absolute number of shares short. So you can see this year, we started the year out with 14.6 billion shares short on the New York Stock Exchange. And we're right now at over 15. And we hit a peak of almost 16 billion in the middle of June. And NASDAQ started at 12.3, went up to a peak of 14.5 billion. And now we're at a little over 14 billion. So we have had a little bit of a pullback here recently. This latest pullback coincided with, let me go back to the sharing. I'm just going to share my screen from now on. It'll make it easier. This kind of coincided, like where we are right now has coincided with the second half of July. Short interest is always a little bit later in terms of its delivery. So this is like where the data is through right now. And we'll get the first half of August data in another 2 weeks, and then be able to look at that and see how short interest has done. But clearly, when we go back and we look at the chart, the table of this, you can see the shorts just kept adding all year long. And so they were basically fighting the market, and then they basically got rewarded a bit here real recently. But now we're kind of coming into the fall period, and we'll have to see how the fall plays out. And one thing that occurs during the fall that we're doing some work on right now is that the mutual funds can be sellers of stock because their tax year ends at the end of September or at the end of October. So a great example of something that's been really weak this year has been Boeing. And you can see that it's gone from $260 down to now $168. And what gets really interesting about this, because if they're going to sell, is our work gets really useful as it relates to short interest. So we're going to go back and take a look at Boeing now. So here's a chart of Boeing, and let's talk about how we look at stocks. I think we've kind of gotten a good backdrop on where the market is overall, and now we can start looking at some individual names and some bigger themes about what's going on within the market. We can see that basically since the beginning of the year, we do a technical rank. We rank how stocks are trading against the S&P over the last 100 trading days. And so we rank it from 100% down to 10%. And you can see we basically have been, call it between 30% and probably 10% for almost this whole year. And what's interesting is from March onward, the short sellers have really come in. This gray area here is the absolute number of shares that are short. And then these dots are what we call a short interest ratio. A short interest ratio looks at the number of shares that are short, looks at it against average volume over the last 12 months, and then builds a scatter plot going forward. And it's the range of these dots is what this is. This is short intensity. So right now, when we're looking at Boeing, we can see that the short intensity is at 64%, which means there is some short selling going on, but it doesn't have a huge ratio because we're looking at its short ratio relative to itself. But this is a name that is going to be susceptible to tax selling coming up in the next 2 months before we get to the end of October. What's interesting is more and more mutual funds have gone to September 30th being their year-end date as opposed to October 31st. So that tends to be why when we enter a year at this point in time where we have a lot of stocks that are down, and we do, what is really interesting right now is only through last Friday, 46% of stocks were higher for the year and 54% of stocks were lower. So we kind of did a unique thing. We went into our let's see, we're going to go to our custom scans and we're going to go look at a workspace we have, which is called year-to-date returns. So this program, Chart Room, is available to any client. We have a lot of clients that use the work to help look at individual stocks, to look at portfolios, et cetera. And we have a lot of ways to screen. So what I'm going to do now is we're going to go in, we're going to look at, we're going to sort by price. I'm looking for another data series, which I thought was here, but now I don't see it showing up. So anyway, the whole idea is to look for year-to-date return and look where some stocks are down that could be sold. So LVMH is a good example of a stock that's been struggling this year as well. And this is an interesting example because the short interest is really low on it. And that means that as it goes down, that shorts could end up covering out of this name. Tesla has been another name that's really interesting. So this is a great way to use our work to help in the whole risk management product. If you're going to try and manage risk, we can see that right now Tesla has short intensity of 38% and it's got a short ratio of 0.8 days. So if people come to sell this stock and there's no shorts covering out, it can continue to drop. And this is what we saw last year and even into this spring. You can see how the stock just kept dropping until about kind of like the March, April period where it hit its absolute low. But this is another good example of something that we're seeing that's going on in the work right now. So short interest is a great thing that we like to look at. And the types classification. So each week and each day, we look at how stocks are doing that are either short squeezes or long squeezes. And so we come into here. Here's our current list of names that we like right now as short squeezes. We'll take a look at them. First up is Fox. So you can see how the shorts have been adding to their positions, and now our short intensity is 78%, and it's strong technically. So this is a situation where the shorts are caught, and this is something that a client would be interested in knowing. So let's say they had owned Fox and they're thinking about selling it, but they see it's in the middle of a short squeeze. They're probably going to hold on to it for a longer time period. Motorola is another name that's of interest in our work. Again, you can see short intensity at 70%, and the stock's doing really well. It hasn't corrected like the market has. Infosys has done well, corrected a little bit, but coming back to life, and the tech rank is still really strong at 90%. And short intensity is 88%, and it's 10.54 days to cover. Here's a name I like, which is really interesting, is VF Corp, which has been kind of a turnaround play. And you can see the stock has fallen a lot from $45 all the way down here. They own Columbia Sports. They've got a big presence in a variety of different labels that they've acquired through time. But the company is turning around, and we can see now the shorts have committed to it. They haven't got out yet, and now things are starting to turn better for the company. You can see the tech rank is at 90%. MasterCard is another name that's of interest in the work. It's doing really well with a high level of short selling going on. We're up at 95%. And the tech rank is at 50, so it's been coming back to life after some recent weakness. The last real strong period was here. We're hoping that the tech rank can improve and get better. Apple, shorts have been in. You can see they definitely did not cover during this time period, and so they're still with it. This is another name that we like. In the financial area, Assurant, shorts have been adding, and the stock is basically getting ready to break out to a new high. A name that has been turning around here recently is Nike, and let's take a look at it today. I saw that a pretty well-known hedge fund manager came into this name. Yep, it's up to 81 and 81 and a half, and it closed yesterday at 78 and a half. So it's up another $3 today. And so this is something that a value guy could use. So key thing here is if you're a value manager or even a growth manager, understanding how short interest impacts the stock is a pretty important thing to look at. Last name, kind of one of the MAGA names, is Microsoft. Short sellers are still there, high short intensity level. The stock is doing pretty well. The other side of this is we look at the names that should be sold that are having weakness, and then we have some clients that short stocks. So if you're a short seller, you would definitely be interested in potentially looking at our work because of the fact that we're able to determine whether there's a lot of shorts in a name or there aren't, and how the stock is done through time. So here's example of some stocks that are kind of weak within our work. Energy is definitely struggling with within our work right now. Antero Resources, Airbnb, most of the hotels and lodging stocks are really struggling right now. We have another name on the list this week, Wynn Resorts. You can see that chart has been really struggling. Coinbase, which obviously is tied to Bitcoin, has been coming down, and it's got a tech rank down 10%. But you can see the short intensity is only at 7%, and it would take the shorts less than a day to cover their position at 0.82 days. Kind of a sideways name that could break is Restoration Hardware, which goes by RH now. BP, another energy name that's been struggling. It's interesting how shorts are in MasterCard, which we looked at earlier, but now they're not in Visa. So for people that do pair trades, we would love the idea of being long MasterCard and shorting Visa. Pan American Steel, Pan American Silver, no one is short that. Tech rank is down at 30%, 7% intensity, and 2.39 days to cover. A name that had done really well, but it's kind of come undone. And you can see at the peak up here, the tech rank was strong, but there were no shorts. So as people started to sell and no shorts started to come into it, it's just made it easier for the stock to drop. And then the last name is Duolingo, which has no shorts, and it's been kind of all over the place, like the market has been. We're hoping that this thing can drop down and go to a lower level. Another thing that we do is we also like to look at options activity besides short interest. And let's take a look here. We run a screen every day to look for stocks that have unusual call activity or put activity. And so yesterday, Teva had call volume of 71,104 contracts against a 10-day average of 9304. So that ratio of 7.6 is pretty high. So let's go take a look at Teva. And like plotting short interest, we do the same thing with options. And what's interesting is overall over the last 10 days, though, the put activity has been higher. So we just identify unusual call activity and put activity. So even though we had heavy calls yesterday, Teva does have heavy puts. And what's interesting is this is now in what we call a put squeeze. So you can see here the stock corrected, and we got these green dots, meaning that put activity was high. When we look at put activity, we look at four things. We look at open interest, premiums, money flow, and the total number of contracts that trade over the last 10 trading days. And we look at it on a median basis. And then you can see at this low, we again got excess put activity, and boom, we got to move to the upside. Another one back there. So this stock has a pretty good tendency when the puts get high and the stock has either gone sideways or down, that it moves up and it goes through a put squeeze. It's interesting to note that this year we really haven't had, even in the April pullback or even in the July pullback into August. Let's take a look. We have not seen put activity get high on a sector level, although we're starting to get there. This is interesting. This has just happened the last couple of days. Through last weekend, we do a weekly report. There are only 2 sectors that had an option score above 70, and now we're up to 5. So typically when we get a decent pullback in the market, we'll get up to 10 or 15 sectors that have put activity in an option rank above 70. So it is interesting that this is kind of like the highest it's been for this year. So it's kind of an interesting thing to see going on from a sentiment standpoint. And then the third thing that we like to look at, which is really interesting for right now, is the seasonality. So what do we do on a seasonal basis? We build every year this magenta line, and it's built January 1st and doesn't change for the whole year. So you can see, and then we put orange shading or blue shading for best period to be short, best period to be long, and we kind of track that. So right now you can see we're in typically one of the tougher time periods for the market, and specifically for the S&P, and that will end on the 28th of August. And then the up period will end on the 18th of September. And then we enter another down period that will end on October 2nd. And then from there, it's off to the races for the end of the year. So a lot of stocks right now are having negative seasonality. So I'm not sure that we're necessarily out of the woods, although we're now up 7 out of 8 days, and it looks like we want to try and go back to the highs. We'll have to see what happens there. A good way to see this is we have a report we produce. So we can look at individual stocks. We can look at portfolios, which we'll look at in a second, and then we can do these screens. So out of our full universe, this is the number of stocks right now that are doing well, that are heavily shorted. You can see it's a list of only 6 names, some pretty well-known names. Costco. We can click on Costco and see. We can see there's good short selling there. Now, if we do the reverse and we flip this, look how big this report is. It's a really large list of names right now that are weak technically, and no one is short. So this is something that the market's going to have to get through between now and October, is dealing with the fact that there are a lot of stocks that have light short interest. As I mentioned, we could see some tax selling out of the mutual funds. This is something that we track, and we're going to keep track of. So far for this week, all the names that we had pulled that could be vulnerable to tax selling are up like 47 basis points. Nothing huge, but they're definitely not going down right now. So we're going to keep watching that and see how that plays, because that could translate into some weakness in later August or September, or even into October. So that's kind of a good overview of our work and kind of what we're seeing now. We would say that we've been in a difficult time period since July. We're getting a decent rally right now in the market. We can see, if we look at our up, we like to track up moves and down moves, and you can see this year so far, we had an up move that started last October that went into March, and the S&P moved 27.6%. And then we had another move after we got through the April correction, where from April until July, we moved up 14.09%. And now we've moved up 5.18% since the low last Monday. And the average over, like, we go back all the way to 2013, so we've got 11 years of data on this, is the average move is about 9%. So we're kind of halfway in a very short period of time. And we can see the down move was a drop of 8.49%. And the March through April drop was 5.49%. So we've only had 2 drops this year. And you can see when we had a bear market back in 22, look how many drops we had that were pretty decent. And if we look at the total drop during this time period, all these drops totaled 93.97%, and the average drop was 8.54%, which is pretty close to our average drop now, or the drop we just got of 8.49%. So those are some interesting things that are going on and need to be considered. In terms of what we do, we take a lot of these reports and we do a lot of weekly work, and we do a lot of portfolios as well. So right now, we do have some shorts on. We're only about 15% invested on the short side. On the long side, we're about 50% invested. So we've got a lot of cash, kind of watching to see how this thing plays out. And it's going to be interesting to see what happens over the next couple of weeks, whether this move continues to the upside or we've got some downside ahead. So with that, any questions? I'm more than willing to answer.
I have a question for you, Geoff. Is there any way, so if I'm a fundamental analysis guy and I kind of do my models, is there any way to integrate or a good starting point to kind of integrate some of the factors that you're looking at? Like, should I start looking at short interests? How would I find that data? I mean, obviously.
Yeah. So what's really cool about our data is we can deliver data to clients however they want. If you click here, you could actually export all the data here, or we can create a file that will export data. So like some people might want to load into their models, short interest, short intensity level, even seasonality. We do a volume indicator as well. We track volume. So yeah, all of that is capable to be seen. Here's a good example. I'm gonna pull up a sample client portfolio, and this is really a valuable tool. So I'm pulling up their growth portfolio, and we know that growth has had a tough time. And these are the names that this client owns right now. And look at this. Over here is what we call our DMA channel, which is how we like to look at stocks on a daily, weekly, and monthly basis in terms of the bias. Like, do we want to be long or short? And you can see there's only two names, Chevron, actually three names, Nucor, and Schlumberger, which are really weak right now. So obviously most of these are energy or material names, but it's a great way to look at a portfolio. And you can see here, how many stocks on trend direction, which is a trigger indicator of ours, are in a pullback or a downtrend by red versus green. And you can see here it is on a weekly basis, and here's our volume indicator. So whatever's green is positive. It's a great way to be able to look at a portfolio very quickly and see what's going on. And this client has been able to come through this whole down period in really good shape. They haven't had a lot of stocks that have really been a problem for them. Okay. So yeah, we can deliver data however someone wants to get it.
What is your data telling you in terms of outlook going forward, in terms of, like, I guess two parts, like Mag 7, is it running out of steam a little bit? Or, I mean, it's hard to predict the future, but I'm just kind of curious, are there any thoughts, or is there any one specific sector or industry that you think, like, wow, it should be coming back?
Yeah, so this is a really good question. So because we do all this work on individual stocks, we can do a lot of really pretty cool sector and group work. So here's our rankings right now of all the sectors. And so 1 to 8 would be the buys, 9 to 16 would be the hold, and 17 to 24 would be the voids. I think the most interesting thing to me right now is how quickly the semiconductors have fallen apart in the work. Obviously, NVIDIA is a MAGA name. It's been doing pretty well. AMD not quite as well, but look at like the 1 month change from the tech rank. It's dropped by 26.8%. In 1 week, it's kind of turned around a little bit, but that 1 month change is really pretty bad. And if we sort it, you can see it's the worst 1 month change out there. And we can look at the shorts as well. And we can see if I sort by the biggest drop right now is semiconductors. And so this is an area I would be concerned if I own a lot of semiconductors, because there's a lot of names that are weak. And you can see how quickly they fell apart in the work. So now we're looking at a tab that it's looking at Taiwan Semi, just because we have to have a stock to benchmark to pull up an index. But it was doing well into the middle of July, and then it just fell apart. And you can see the average tech rank just completely dropped. The shorts are now gone. They covered in this drop period. And you can see that right now, 22% of semiconductors are what we call a long squeeze. They're weak and no one is short, and only 2% of semiconductor names are in a short squeeze right now. And then down here is the black line is a daily advanced decline line, and the kind of grayish line is the issues above the 50-day moving average. So yeah, semiconductors would be something I would really be paying attention to right now.
In terms of them being like not a good outlook.
Not a good outlook right now, and we got to wait for stuff to improve before we want to come back into them.
Okay. What about broader market? Is there any way to look at that, like as like an SPY?
Yeah, so when we're looking at our sector ranks, it's very easy to see what's working and isn't working. So if we look at what's working right now, telecom, insurance, real estate, utilities, these are all things that have a higher yield and are defensive in nature. And also food, beverage, tobacco is there. So the 5 of our top 8 sectors are in that category. And then we got media, banks, and one tech sector left, computers and equipment. So there's been a shift from kind of growthy type names to value type names, and you can see it within our work right now. And on the bottom, transports, consumer services, food staples, retailing, consumer durable apparel, energy, materials, semis, which we mentioned, and autos. So a lot of stuff related to the consumer, transports, consumer services, food staples, retailing, consumer durable apparel, and autos. All those are struggling. Everyone kind of knows the consumer's struggling. Walmart just put up a good number today. Clearly they're at the lower end. But people that might have been upper middle or upper lower class are kind of going to Walmart when they hadn't been before. But a lot of consumer type stocks are really struggling within our work. So we can be pretty thematic for people too. A lot of macro people like our work because of our ability to kind of catch trends pretty nicely as they're starting to occur. We're never at a complete top, but we get in pretty nicely off of the low. Never the absolute low, but kind of close to the low.
Okay. All right, that's great. I don't know if there's any other questions. Let's see, maybe pop one here. Is there any reason to consider institutional versus retail trading when looking at short interest? Obviously hard to determine sometimes, but I'm curious if this plays a role.
Yeah, so that's actually a really good question. And so let's look at Taiwan Semi as an example. So a big misconception about short interest is that it moves like an F-15. It doesn't really. It moves more like an aircraft carrier. So you can see like on Taiwan Semi is just a good example. Like bit by bit, the shorts have been adding to the position for most of the year. And you can see back here, they started covering out of it. So it takes a long time for short interest to really change. And there's a couple of people that use pieces of the overall short interest data, like someone like there's a couple primes that contribute data, and so you can look day to day to see, but it's not the overall thing. And so if the primes had a concentration or a style drift, they might be getting a move in short interest wrong. But all the firms like Morgan Stanley, Interactive Brokers, all the individual trader data on short interest is calculated there, and then it's rolled up into our data. So our data is the biggest universe of stocks for short interest. So we're calculating all institutional stuff as well as retail stuff out there. So, and I guarantee you this, most retail people have no clue about whether how much short interest is in a stock or not in a stock, and that's a key thing that can really move stocks around. Institutions are, but not a lot of retail people are.
Right. Interesting. Okay. Well, I don't think we have any other questions, but this was very informative. I know I learned a few things, and I think this is a valuable way to look at things. And we're always, like I said, we're always trying to bring our clients content that might be a little different from how they're looking at things and some unique perspectives. But taking a look at that short interest particularly is something that I found helpful. No question.
Yeah, I definitely think like a trader would be really interested as well, because traders want to figure out whether they need to dump a stock right away or they can take their time. So they have a stock that needs to be sold and it's a long squeeze. If they can get out of it without, a lot of price, change, that's really good. Likewise, if they're going to sell something that's in a short squeeze, they can take their time. So definitely a key thing for any trader to be made aware of as well.
All right. Well, thank you, Geoff. I appreciate
Thanks.
it.
Say hi to everyone in Dallas for me.
We'll do that. Absolutely. And thank you, clients, for joining us today and any friends that joined us on the call. Next month, we're going to have Katie Stockton of Fair Lead Strategies. So we'll be getting you some information on that via email. Usually our time is the third or fourth Thursday of every month, third or fourth Thursday. I think it's third. So we'll reach out to everybody on that. But thank you everybody so much for taking time during the day, and we'll catch you soon. And hopefully everyone has a good month and has a good month in the markets here. Thanks a lot,
Take
Geoff.
care.
Appreciate it.
Thanks.
Thanks a
Bye-bye.
lot. Take care. Bye-bye.